Hi, everyone. Thanks so much for joining another month. And we've got April payrolls coming up in just 10 minutes time. It's been a really big week, actually. It's been huge. Let's dive straight into the charts and we'll talk it through the charts. The first thing I want to look at, obviously, this is the dollar index, because that is by far the most sensitive asset class to the payrolls. Data going back many years will tell you that. This is just today's movements in, or the last 24 hours movements, I should say, in dollar index. As you can see, it's kind of not really gone anywhere. It attempted a bit of a rally, but it's since backed off. And to be honest, it's not much of a rally. It is below 98. So if we just stretch that back a little bit, just over the last 3 months, as you can see, the longer term picture is one of weakness for the dollar. And I don't think it's going to take an enormous payrolls to change this position for the dollar. The reason why, and I'm just looking at an alert that I got, which was Marco Rubio in the US saying that a deal between the US and Iran should be negotiated today. Now, we've been here before. This feels a little bit more real. And it's official statement. Obviously, he's not going to say, Secretary of State, who's not going to just make something up like that. So I think it's going to be really hard for the dollar to make a comeback, because all of those longs that were put on during the war have now been unwound. And indeed, we have seen a little bit of a slowdown, of a weakness, turnaround in the dollar, but to be honest, it's weak anyway. And the lows of the day is coming in about 97.75, with the highs there at 98.20. So it's very much range bound, actually, as we lead into payrolls. Now, I also want to show you gold. Gold's had a pretty decent week, actually. It has been up. Oh, sorry, just bear with me with the gold price. Oh, it's always a little bit funny here. Yeah, this is a 5-year gold price. Sorry, guys, it's not going to be great. But we've really kind of been trading sideways below that $5,000 level, well below it at times. But we have essentially been trading in quite a positive fashion. So as the dollar has come down, gold has gone up. It's not trading in that parabolic way, but it still is up a decent amount year to date at about 8%. So it does suggest that there is buying demand for gold, especially as people maybe are exiting oil longs. So let's take a look at the oil price. Before I came on air, just before, oil was trading at about 101. It's now trading at 130, just over $100 per barrel, basically. You can buy it for 136. $100.36 for crude, for Brent. So it's still hovering around that $100 barrel level. As I said, it's probably dropped back about 70 cents since I looked at it just before we came on air. So there has been a little bit of movement on the back of that announcement that there could be a deal. But really, to get us back to those lows, we had got to as low as 96.10 yesterday. Remember, yesterday there was high hopes that there was going to be a deal, there was going to be a memorandum. Then there was going to be after the memorandum, there was going to be 30 days where they'd renegotiate to reopen the strait. Not quite ideal, because a lot of investors would love to see the strait opened today. But that's obviously not the case. They obviously are going to be negotiating, but steps towards opening it will, dragged us lower back towards that 96 level. I think if we do get a deal, I don't really see us getting too much above there. But I do think that, yes, we've got payrolls. Obviously, the economic data is really important. But it seems like as we go into the weekend, we're really looking at kind of what's going on in Iran. So it's all about the Middle East. So the focus is the Middle East. We'll take a quick look at the US 100 as well, the NASDAQ. Because obviously this week has been fantastic for stocks. Really, they've reached record highs. This is the NASDAQ versus the FTSE. The FTSE has not been so good, along with a lot of other European stocks. As you can see, there's clear divergence, right? The FTSE, the NASDAQ reached record highs. It backed away from there on Thursday. It was backing away earlier. Just bear with me while I get my latest futures prices. I'm just looking at a different screen for this. I would imagine futures in the US, we're pointing slightly higher, but they've jumped quite a bit on the back of that news from Marco Rubio. We've got NASDAQ futures poised to open 0.7% higher, 0.49% higher for the S&P 500 and 0.3% higher for the Dow futures. But remember, a lot of this strength, this is a month-long chart for the NASDAQ, and I'll put it up there because it's just been such a fantastic rally, that has really been driven by what's been going on in earnings. They've had a fantastic earnings season. Tech is really pushing away. You may have seen an article that went round today. It was in the FT, but it's basically saying that the concentration risk is higher now than it ever has been. We were talking about concentration risk in 2024, in 2025. Excuse me. Now it's got even more, it's got even narrower. So it's just down to 5 companies. So Nvidia, Apple, Amazon, Google, and AMD. They are just some of they are the main stalwarts that are holding up the index right now. We've seen some terrific performances, don't get me wrong, some real turnarounds. Remember, Nvidia not that long ago got to a record high. That's a $4 trillion company. So even though it's lagged other companies in its sector that are listed on the NASDAQ 100 in terms of performance, in terms of percentage gain over the last few months and weeks, because it's so big, because the company is so big and it is a market cap weighted index, when Nvidia moves, the index moves with it. So this movement that you can see in the NASDAQ is all down to demand for high, the mega cap tech stocks, essentially, the hyperscalers, the Amazon, like Alphabet, not Microsoft so much, and definitely not Meta as well. In fact, if I was to just switch this over, you'll see what I mean by that, because Meta has really lagged. So there has been, as you can see, this is Meta over a month. It really has lagged what's been going on with the overall NASDAQ. If I just look at it on even a year basis, as you can see, it's the same thing. Meta is just really struggling because it's spending so much on AI, but it doesn't have like a full stack AI offering. So it needs to pay for the chips. It needs to pay for all the cloud space. It doesn't have those same benefits that some other companies do. But the bigger picture is US stocks are in fantastic shape going into this report. We've also got a dollar that is withering just a little bit. Now, just bear with me because I'm going to stop sharing and I'm going to share another screen so that we can see really what's been going on ahead of payrolls. So just bear with me, guys. I'm going to bring it up now. And we'll take a look at what's going on with payrolls. So as you can see, 2-minute countdown for me. So this is payrolls. So we're looking at a reading of 62,000 for payrolls. That's down from 178,000 in March. So we will be seeing how that all works. So hopefully you can see the screen now. Great. Thank you so much, guys. So just bear with us if it takes a little bit of time, but I will talk you through all the numbers. So you'll definitely have all the numbers there. We've just got about 2 minutes left to wait. So 62K is what is expected. That's down from 178K in March. The unemployment rate is expected to remain steady at 4.3%. And then we also have wage growth, which could actually pick up a little bit. Wage growth has been, wage growth fell back to 3.5%. In March. That was the lowest level for 5 years. It's expected to pick up a little bit to 3.8%. Now, some of you will be like, oh, that's a sign that inflation and pressure is building in the US economy because of what's going on with the Middle East and with the energy price spike. Yes, that's true. But actually inflation, real wage growth, when adjusted for inflation, for all those price rises, would actually only be 0.5%, even if wages expand to or extend at a 3.8% annual rate for April. That would still mean that they were only rising at a 0.5% annual rate, I should say. And I don't think that's going to be of any concern at all to the Federal Reserve. Now, I'm not saying that they're going to hike rates anytime soon. In fact, there are no rate hikes expected. There's a 20% chance no rate cuts expected. There's a 20% chance of a hike by year end expected. But I do think that even if we get that little boost in earnings growth, I don't think that's going to be a huge deal right now. So we're coming up now, 45 seconds. Remember, the one thing to point out as well, we have got a lot of we've had a lot of job cuts announced from the tech sector, Coin and Bitcoin and the crypto sector as well. Coinbase announced they were laying off 14% staff because of AI. Meta as well, another 10% of staff because of AI. And we expect more of that to come. So we're just waiting now. 20 seconds. Let's see what the overall numbers are. We'll be looking for what is coming up. Again, remember 62,000 is what we're looking for, with 178 for the month prior. I think the bias is slightly to the upside, so that's coming up now. Oh, we're just waiting for the actual figures. A bit of a delay actually going on. Oh, here we go. So we have got a Payrolls of 115K. So the bias was to the upside. The market was right. We have got an unemployment rate of 4.3%, which has remained steady. That was also expected. And then we've got slightly weaker than expected earnings growth, actually 3.8%. So it was 3.6% versus 3.8% expected. We really are seeing the kind of a Goldilocks report, really. Stronger private sector payrolls, that's really interesting. We saw drops in the government and manufacturing as well. So that's going to be really interesting. Part-time employment, well, that rose, but that's in Canada, so we won't look at that one. But we have got private sector payrolls rising at a very strong rate, 123,000. So much stronger than expected. Strong as the March numbers, but much stronger than expected. So payrolls much stronger. Let's go back to taking a look at what the market reaction has been as well. So we're going to take a look there. Obviously, this one's closed, but we are going to we're going to take a look at what's been going on. Oh, it's a bit of a whipsaw price action there. Let's have a quick look. Yeah, as you can see here, can you see that? Whipsaw price action, doesn't know what to do with itself. It's gone up to 97.85 on the back of that stronger than expected payrolls, but I do think that we're going to hit a bit of a ceiling at 98 because of that weaker than expected reading for wage growth. So that is something certainly to watch out for there. We're not going back to the highs of the day in the dollar index, which is coming around about 98.20. So we're still trading in that quite tight range, but we've just popped higher a tiny little bit, but we are trading in such a tight range. I think the market is saying, yes, there's payrolls. Yes, I respect the payrolls, but I really want to hear what more is coming. I keep seeing my phone ping because I'm expecting to hear something, but payrolls, yeah, basically payrolls are just very, very, very strong. Very decent number there. We've seen a kind of a fantastic sign that the US economy really is strong underneath. Now, what does that mean? That actually does mean that we could see less of an impulse to go and cut rates by the Federal Reserve. So that is something to watch out for as well. Let's take a quick look as well at what the pound is doing. So we'll go back to the dollar in a moment, but I do want to talk about the pound today. And the reason why is because, that's a bit of a funny number. Obviously, I know that sometimes this can be the case. The pound is currently trading 136.17. As you can see, so it's jumped today, even though there were local elections overnight and there was real concern about political risk being built into the UK. That doesn't seem to be a problem at the moment. It looks like Keir Starmer is staying, even though there is a bit of a massive a massive kind of drop in support for the Labour Party. That seems to have switched to reform a little bit, but I think the thing that investors are pointing out now anyway is that there doesn't seem to be any challenges to Keir Starmer emerging at the moment. So that suggests political stability. Remember, we've had 6 prime ministers in the last decade. That is a huge number for the UK. It makes Italy and other countries in Europe, which typically were more politically fraught than the UK, it makes them look really stable compared to the UK. So the fact that it looks like he's going to hold place, even though the Labour Party is not popular and has had a real drubbing at these elections, that is something to watch out for. Now, I do just want to share another screen just so that you can see what's going on today. So I know this is going to take a little bit of time, but we're just going to look at what's been going on. Yes, there we go. Right. So what we're looking at here are bond yields. And I just want you to see this little mini chart up here. This is the UK 10-year bond yield. As you can see, the yield has fallen today. So the yield has backed away. It's at 4.89%. It had been above 5% earlier this week. So we really have seen a decline. And these local election results have not spooked the market. So that is something to watch out for. I also just want to zoom up a little bit and then we can just see a few other bits. Just want to take another look at oil. I think it's worth looking at oil, see where oil is going. Here we go. Yeah, oil hovering around that 108, $100 per barrel level, but it has backed away from today's highs. As you can see, it really is, it's kind of sinking. But we do need to hear from Marco Rubio, actually get it over the line, this peace deal, before we see any more. Crypto has also actually been knocked a little bit. But if we just look at stocks, sorry, we'll just go to the very top here. If we look at stocks, as you can see, Nvidia obviously had done very, very well yesterday. But these were yesterday's figures for the S&P 500, the NASDAQ and the Dow. As you can see, they all backed away from their record highs. Not very big losses. The S&P 500 comfortably above 7,300. The NASDAQ definitely going to close in on that 30,000 level surely at some point, but it wasn't going to be yesterday. But if we just look around the European stock space, this is the Nikkei. Sorry, if we look at the FTSE 100 today, I mean, it's basically flat. It had been down a notch, but the investors are kind of keeping on the sidelines, I think, this weekend, because there could be a lot of noise, but it does set up for quite an interesting weekend. The DAX had been lower, so it had been down 1.5% earlier. It's now down 0.93. So that again suggests that there's a little bit of better improvement in risk sentiment, but it's not quite enough to push us into the green or to push US stocks back to record highs, although there could well be record highs today, depending on where we go next and what we see from the administration in the US, but also from the Iranian side, because overnight everything kind of dipped late last night because there was more fighting between them. So that doesn't sound like a peace deal, but we'll have to see. Just looking at where oil could go next. I know a lot of you love trading oil. Oh, sorry, just bear with me here. We're nearly down. Oil has been, goodness, it has been literally all over the place this week. And I think that we are just stabilizing just a little bit. So oil has been up 5.6% over the past month, but it's been up 64% year to date. So it is slowing those gains. It's down 10% in the last 5 days. So this has been a bad week for oil. Do you remember those highs above 114? We had a really bad day on Monday. No hope of reopening the Strait of Hormuz. Well, that seems to have just backed away. That doesn't seem to be as much of a concern right now. Again, sorry guys, we've got literally so much breaking news coming in as well. We've got the Dow futures. They are gaining 200 points actually, as there is expectations that the jobs report is strong, but also expectations for an Iran deal. Those two things are very, very powerful for risk. So that's what's going to weigh on the Brent crude price. This is just over the past week. We look at it on the past day. It does look like that we're really going to test that $100 a barrel level. The market really wants to push it below there. But will we get a weekly close below there? That is something to watch out for. Still a very news-driven market, and there's no doubt about that. You need to have your wits about you. You certainly need to be trading carefully. If we just go back, I just want to have a quick look at what's going on with. Want to have a quick look at with what's going on with the pound as well, just to see. Yeah, so the pound has backed away a little bit, but not massively. I mean, look at that. Who would have thought that the pound would be one of the top 10 performers, actually? This is over a year, but if we just look at it over the month, again, really strong month for the pound. And just today as well, we've just been climbing because it doesn't look like there's going to be any threat to Keir Starmer's leadership. So we're really kind of backing away, just pricing out a bit of political risk. And maybe, we'll have to see, but maybe there'll be less pressure for him to enact, more fiscal largesse or more spending, because they really have taken a drubbing. And the soft left has taken a real drubbing as well. So maybe he needs to change tack, become a bit more wary of the fact that taxes are at a record high and that borrowing is just too high. But right now the pound is looking pretty optimistic. We've got some good news on the futures there, some good news from the payroll, a very strong payrolls report, or strong Goldilocks scenario really on the payrolls report. And we've got hopes of an Iran deal. I mean, it's almost like the perfect Friday that's coming together to trigger a rally into the end of the week. So we will be looking for some more record highs from US stocks, and we'll also be looking for news of that deal. Obviously, if it falls through, then you get the complete opposite, and that will play out on Monday if we get that over the weekend. But what we want to know, will there be a rate cut? Someone is asking, will there be a rate cut? It doesn't look likely, but it really does depend on how the next few months pop out. So when you look at, well, I'm assuming what you're meaning here is the Fed, but you might also be meaning the Bank of England. The part of the reason why UK yields have remained strong and the pound has remained strong is because the Bank of England were expecting, the market has been crazy pricing in hikes for them. That doesn't seem like it's that likely, actually. now, particularly if we get a deal and the oil price falls, then I think they'll remain on hold and they might even cut by the end of the year. Likewise, I think it's the same story for the Federal Reserve. It's going to be very hard for them to cut now. It's going to be very hard for them to cut with an unemployment rate of 4.3%. But if we are to see job losses rise, we have obviously got a new chair that's coming in next week, Kevin Walsh. He has got a more dovish credentials than Jerome Powell does, so his bias might be to loosen, but he's not going to do that if it's not the right inflationary environment. So we're going to have some bumpy economic data over the next few months. What we need to see, though, is for the war to end and the Strait of Hormuz to reopen kind of now, like this month sometime. Then we'll have some bumpy data over the early summer. And then hopefully by the autumn, things will clear. And that's when they could cut rates. It's very hard to do that now. I don't think that it's rate cuts that are weighing expectations of rate cuts that are weighing on the dollar. I think it's just a bit more of a global unwind of long dollar positions, of long oil positions on the back of hope that this war is going to end. So guys, thank you so much for joining. We really appreciate it as ever. Please continue to look out for all of our YouTube channels and our analysis is just on the website, and good luck trading. Thank you.